Perfect. So Ashley is speaking at this conference here in Chicago today. It's called the Built Worlds Conference. The Built Worlds organization is it's an industry trade group basically for construction companies, and we're talking some of the major construction companies like a Bechtel that are doing large commercial projects. They've gotten together and they recognize that internally they don't have the capacity to really be innovative on a grand scale that's going to move the needle for the industry. So they've come together as a group. They do have their own corporate venture, but they're bringing in venture VCs that have VC funds that have a focus on construction tech. And they talk about the challenges, and they bring in some startups to discuss what they're doing, and they try to help each other out through financing, through just doing use case studies and even pilot programs with some new technologies. But a big group that's involved in there is Procore, which I'm sure people on this call have come across. It's the enterprise software giant now for construction industry, but they're a relatively young company.
Is this just a company doing its own thing, or is it a group?
So it's a group. It was started by a construction company here in Chicago, but one of their big members is MyTech, for instance. Yeah. And in fact, I'm going to have a cup of coffee this afternoon with this woman at MyTech who leads up the innovation kind of committee, if you would, at MyTech, and just they're out there learning what's new and how they can incorporate it. But what I find really kind of exciting about the whole group is there's going to be some massive changes in the next 5 years, and it's going to come from areas you just don't expect.
Yeah.
They're big on robotics. They're very big on job site visibility. Very big on safety. So some really great initiatives that this group's putting out. But anyway,
I've had more conversations this week than in a long time about how the building industry has got to change. We just can't keep building houses the way we're building houses, because we can't catch up, and they're not affordable and energy efficient and all those kind of things. We're still, you look on my street, you go down the road, and it's just the same box built the same way, with a roof and a floor and a wall and a window. And it's going to be interesting to see what the new innovation is, what a house looks like in 20 years.
Well, I can tell you what it could look like next year. Yesterday, we had a gentleman in our office from Volumetric Builders. It's the company that bought the assets of Entekra, or not Entekra, Katerra. They bought Katerra's wall panel plant out in California. They're retrofitting it to do modular, that's where they build an entire unit in the factory, haul it to the job site, and set it like a Lego. One of the very interesting things they've also bought is a company in Poland that's using steel to build modules. And I'm like, is that for the European market? He's like, no, we're bringing those full units back to the United States.
Building them in Poland and building them pre-assembled here?
They're completely built in Poland, and they ship it over like a container. It doesn't go in a container, but like a container. When it gets here, they just pick it up, set it on the job site. It comes over with a lock on the door.
That's got to be expensive.
Evidently the cost structure is such that it makes sense. They own the furniture manufacturer right across the street, so they make the furniture across the street, put it into the metal unit, put it on a vessel, get it over here, and ship it to a job.
They're shipping a furnished home from Poland, ready to plop on a job site.
Well, it's not a home. These are going to be like high-rise units going in a high-rise hotel room.
Oh yeah, that's pretty cool.
It is. It's really amazing. All right, look, let's kick it off here. We're ready to go. I'm going to share my screen here, and what I'd like to just kind of highlight first, Jerica Harris wrote "Pain Required,"
Yeah.
and when I first saw that, I was kind of like, "What's that about?" And then as I was reading through it, it just makes sense. We have massive inflation going on. Why? Too many dollars chasing too few goods. Just like a kid who's doing something they probably shouldn't anymore, we as a society need to basically have our hands slapped and say, look, you got to slow down. There's not enough resources currently in the system, and we're driving up prices. And that's what the Federal Reserve's doing. They're jacking up the cost of money. They're slapping our hand. So you want to take that trip this summer. You know what? It's going to cost you more. There's, fuel prices.
Exactly.
You want to go out to dinner. Guess what? It's going to cost you more. We just have to slow down our consumption. And that's the pain that we're going to feel.
I think it's interesting too that not only the whole thing started, the conversation started off with the middle class and lower class are going to feel it at the gas pump and at the grocery store. But I think it's interesting this time, right now, that 10% of people that trade stocks, they just got a haircut.
Oh, yeah.
Yeah. I mean, it's just it started from the top down of like, well, maybe we're not going to slow your spending, but we're going to cut your net worth by about 30% real quick.
For sure. And if you think about this, if you're saving up for a house with the current low interest rates that we had previously, you didn't have that money sitting in a bank account. You had that money invested in something, right? And
Right.
unless you timed the market perfectly and you said, okay, it's time for me to buy this house, I'm going to cash out my stock and go shopping. Well, if you didn't do that, the house you can afford just got a haircut of 30%, or the down payment just got a 30% haircut.
Yeah. Yeah, and that's probably the big chunk of the whole down payment was probably all that could be all that 30% was. But I was talking with Tim at what's the housing place? Just went blank, but John Burns.
John Burns, okay.
Yeah, and I said, do you guys have any data on if anybody would, they probably would, on like any ratio between affordability and all of a sudden the shortage of new homes? Because we went for 10 years and nobody said anything about any housing shortage. And then all of a sudden interest rates get to be 2% and you can build a house for $75 a square foot and everybody in the world can afford one and everybody wants one. But prior to that, when interest rates were 8% or 6% or 9% or 7%, whatever they were, there was a number based on wages and the relationship to the cost of getting into a home. It just didn't work. But all of a sudden, interest rates got cheap, wages started to go up, and that ratio of the number of people that could afford a home became bigger. And so I'm thinking that I don't think we've got an underbuilt situation of homes. I think we just reached an inflection point of where homes became more affordable for more people over the last couple of years. And we fixed that real quick by just jacking the price back up to where it priced people out of the market. And so now instead of $75 a square foot and 2% interest, you're back to 5% interest and $400 a square foot.
Yeah, absolutely. And it's not just in homes, in apartments as well. One of the guys that works here, he was going to go rent an apartment, and his first pass through was going to be he was going to live by himself in a 1-bedroom or something. He quickly discovered, guess what? That's a little too expensive. Now he just signed a lease with 2 of his friends, and the 3 of them are going to live in a place.
Right.
So you basically took 3 guys that were going to have their own place and went down to 1.
Mm-hmm.
So you're spot on, Matt. We like to get as much as we can. We want to live by ourselves. We want to live in a big house. We'd like to have a second house, and when we can afford it, we do that. When we can't afford it, we don't. So it just kind of pulls back. What do you got going over here where you're talking volatility, just taking a break? What are you thinking about when you wrote this?
I think the underpinning of housing, going back to kind of what I just said, there, what we've revealed is there is somewhere between 1 million and 10 million people, whoever you talk to, there's a buttload of people that want to buy a house.
Of course.
That want to own a home. And the desire is not going away. We're just all of a sudden, it's gotten too expensive for this. But like you said, the supply chain can't keep up with it, for one thing. And that's one of my thoughts is this. It's, imagine the supply chain is like an upside down funnel. We've got all this pouring out at the bottom of people that want the fewer goods like you're talking about. I think the biggest problem in the supply chain is we've got too many products that we're dependent on that are like single company products, like phenolic resin. Remember when they had all of a sudden you got nobody thought about freezing in East Texas, disrupting the building industry for 2 years. And, baby food or baby formula, or right now there's a company in Shanghai that makes almost exclusively all the dye for CAT scans in the entire world. And they're on lockdown. So you go to a hospital to get a CAT scan or a brain scan for see if you've got some kind of something going on with your heart or brain. You likely can't get a scan because they don't have the dye. And people are dying because they can't confirm if they're having a heart attack or not.
Well, this kind of actually reminds me of shopping at Costco, where you're going to get a great deal, but you might not get the selection that you actually want, right?
Right.
And I know my wife, she shops at about 3 or 4 different stores, one of them being Costco. And, the reason she shops at other stores is because they have the variety. So I think you're spot on when running your business. If you get very locked into just one supplier or one supply channel, you put yourself at a major risk for a supply chain disruption.
And not only that, it just like if you've got a product, for example, I mean nobody can go without carrying OSB, but there's got to be some sort. The industry needs to find a solution to, like, how do we avoid that kind of problem again? Like the chip makers, all of a sudden we found out we were locked in on chips and couldn't get cars for 6 months. It took 2 years, but we got additional chip sources now. So there's, we need to be looking at things where our pipeline or our funnel gets us locked into one small item that could, get devastated by a weather event or a plague, a health event or something, and it shuts down an entire industry or a piece of an industry that disrupts the whole thing. Yep. But as for the volatility thing, I think that there's just such a big press right now by the Fed to get inflation under control. And I wrote it on the next page, like, if it might be at the bottom of that column, if it's such a big deal, why are we doing it a quarter, a half, a quarter? Why don't you just raise rates 5%? Just shut it off. It's like rip the Band-Aid off, drop the atom bomb, amputate the leg, whatever analogy you want to use. But if the goal is to slow people's spending down, just cut it off and make it slow down rather than bleeding and slowly. Just
Matt, all due respect, I think I'm glad you're not on the Fed right now.
I haven't had any emails today saying that's a good idea. So, other than I did see this, the one thing that made me question it was Jim Cramer said the same thing this morning. I went, that's not an ally. I shouldn't have that. But.
So I'd like to highlight something that I learned last Friday. I was on we were heading to northern Wisconsin. We stopped at a user in Green Bay, Amerhart, actually. And I learned that Amerhart was now inventorying European 2x10, the wides, 2x8, 2x10 Euro spruce. And that's a perfect example of expanding your supply chain. I remember when I first started in the business back in the 90s, in Wisconsin, it had to be Western Canadian spruce only. I mean, that was it. You don't understand. A nail will not go through any other type of wood other than Western Canadian spruce. It doesn't matter. Don't even bring it into the state. It's not going to work.
Yeah.
And a couple weeks ago, we sold a truck, a 2x4, 10-foot Southern Yellow Pine into Madison, Wisconsin. But here's the hook on it. We didn't sell it to a distributor or a retailer. It went to a framer, like a multifamily framer who's using nail guns. And he's like, I don't care. It's
I don't have to swing the hammer. That's a good point. Yeah.
He's like, I crank up the air on the nail gun. Boom, it goes through. Move on.
Yeah. Good point.
Yeah, you're right. You get locked in to this is the only thing I can use. You're going to be ripe for disruption on supply chain.
That's kind of like in the Northeast. There's a pocket up in the Northeast that still only uses fir plywood for walls and floors and roofs.
Well, heck, when we were in this rally and OSB was more expensive than fir plywood, we were going back to people. I know you're bidding for OSB. Would you take fir plywood? Oh, I don't know. I got to go see if that's in the spec. You're like, whoa, wait a minute.
Maybe, I don't know if I could use that's too good.
Yeah. Anyway, so I think it's important that everybody does take a little look internally and say, what can I do to add in some flexibility into my supply chain?
Yeah. And that that goes all the way down to the builders. Like when when I've done so much consulting over the last couple of years with some multifamily builders specifically that have always bought from the same people, same truss manufacturer, the same lumber yard, and the reason they called was they got hurt, they got cut off. The supplier couldn't make the delivery back in the COVID time, early COVID times. And I said, well, who else have you got? They don't even have anybody else in the Rolodex. I mean, they didn't even have any idea who else was in the business. So there was a little honey hole there for a while, just passing out names and phone numbers. But you gotta be aware of what where your weak spots are and what your backup plan is.
Yeah, for sure. All right, well let's get into some numbers here. V session. Was that a quote by you? Are you starting that?
I coined that phrase. Had a recession, a V session.
All right, we got a V session. What does that mean?
I think that means that we have not yet seen a panic on the lumber side of things because we haven't seen a panic on the economic side of things. And the panic's going to come. I do believe that the Fed's going to get pressured to try to catch up on inflation, and it's just going to chop housing. It's just going to chop housing off at the knees. I talked to a builder yesterday who said that he's waiting he's not starting anything else right now, but he's planning to start about 60 homes in October. And the reason he's doing that is because he's got to wait 8 months for brick. So he said brick and windows is still his hang-up place. But so what he's doing, he's planning ahead for if they can't get brick down. Actually, he's in Oklahoma, I think, or Texas out west. But he's buying brick from North Carolina. That the freight is the same price as the brick is. So he's basically paying double for the brick, but he can get it.
Sure.
So what he's having to do is he's having to schedule his homes out to say, okay, if I can it's going to take me 8 months to get my brick. When do I need to start my framing? So based on that, his framing was going to be in October, and he said that's going to be the biggest month of starts he's ever had in the history of his business. And I think that kind of thinking is going around. It's going to be catching on. Like I want to do. Meanwhile, lumber falls. You get lumber down to $500 or $600. You get a chance to buy that while you're waiting on your other items that you can't get. So I think we're going to have a sharp sell-off in lumber that will go through the summer. We're probably going to have a little underbought bump because looking at the chart there, you can just see that the prices in April did not go up much, which indicates the market did not get overbought in April like it typically does. In a May liquidation, which we're having started early, everybody's going to run out of lumber quicker than they normally do. So there's going to be an underbought rally of some degree, probably around the 4th of July.
Yeah, it's a shift. The whole chart just shifts a little bit to the left.
Yeah.
So we get caught up talking about the demand and the supply. Mostly the demand, where we're looking at housing starts, and they're going to do all these. Well, the reality is, building's a pretty flat curve. There's a limited number of workers, and they can only go so fast. But the buying for those jobs, which I call the perceived demand, you can buy, say, 3 months worth of wood in a 2-week time horizon.
Right.
Now, then you look at the supply side. The supply's on a really flat curve. Now, the supply, they have a harder time actually selling 2 to 3 months worth of inventory in a 2-week time frame.
Right.
And what they do is they jack their prices up. So all of a sudden, you've got your little compressed window where the perceived demand is high, the perceived supply is low, and prices escalate. Then the buying's done, and guess what? Now you've got an extended period of time where the perceived demand looks really low because it was already taken care of. And then the supply actually kind of catches up, if you would, and it appears as though we're in an oversupplied market, which is happening right now.
If you think about it, mill production is probably the most stable of everything that there is. I mean, they make a certain amount every day and every week and every month, and they run flat out. The only thing that changes the price trajectory is what you just mentioned, is people say, well, let me get 4 months worth now, and I'll have 2 weeks worth at a different time. But in essence, what would stabilize the market, if buyers just bought what the mills made every single day, then they'd be building that inventory during times when consumption was lower. It would just automatically happen. And then when their demand was off, then their inventory would be declining, and they just have this flat inventory all the time. And basically, if the mills could sell to the builders and eliminate all the people in the middle, it would keep prices relatively flat.
Well, that's pretty true.
If the mill just said, the only way I'm going to sell you is I'm going to sell no more than a 1-week order file. I'm going to sell you what I have for a week. That's it. That's all you get. And prices, it's only when they start selling out 4, 5, 6, and 8 weeks that they get those absorbent prices with people willing to speculate. If you take the ability to speculate away, then the volatility goes away.
Yeah, but what fun would that be? Speculation is fun.
Yeah, that's what you and I'd be pushing a broom somewhere, so that wouldn't be fun.
So we just kind of highlight what we're already talking about. Look, housing cool down is happening. Entry-level buyers are priced out a little bit. Transportation is an interesting one. We've seen internally here, prices are coming off for sure, but diesel prices are going up. So, unfortunately, the glory days for these trucking companies is probably coming to an end. They
watch the chat box now. Somebody's going to tell you how wrong you are about that.
Well, okay, they can tell me, but I know what we're paying for freight.
I hear it every day. There's another argument for it. It's not better here. It's still tough here. You can't get them. Logistics is still a problem. And
here's what I would recommend: if you're having a problem getting trucks, call us, because we can probably find you a truck using our technology and our capabilities. Let's see. Okay, the Fed. Yeah, the Fed's doing what they're doing. These are all the knowns. Let's jump over to your report from Monday. And here, you talk a little bit about your V session with a summer bump. I kind of agree. I think that I can buy into that.
Well, and when I'm talking about that, I'm not necessarily talking about how the economy is going to go. I'm talking about how the lumber market's going to go.
Right. Yeah, for sure. And
I think Kyle mentioned something in the comment there that the same comment as last week about just to clarify that we may be talking about different things, but I'm specifically talking about how lumber is going to look, Kyle, not necessarily what the economy is going to look like.
Oh, okay, yeah, right. This is the very short-term horizon about lumber, which this is the swings of a commodity market for sure. And if you time the swings right, you will be better off than getting whipsawed by the swings, which is what we're trying to help you do here today. Okay, let's look at this chart. I think it's a perfect example of the shift I was talking about. So the peak right here, peak right around here was week 10, and this is week 22. So it's about we're a 3-month shift, right?
Well, here's another little anecdote that the markets usually peak in March or May. And when you have those peaks in March or May, a third of the times it's March, 2/3 of the times it's in May. When it peaks in March, we have an underbought rally, or an underbought rally. Or in the summer, you get a summer bump that's better than normal. That when it peaks in May, there's more wood in the pipeline, so that summer bump is lighter. So I think what that tells us is we're going to be market's going to run out of wood. While in summer, when things seem to be bad, it's not going to be, even no matter, regardless of what's going on with housing or do it DIY or any of that stuff. The field of lumber supply, the pipeline is going to get underbought and run out of lumber in the summer before the season's over, and it's going to have to have a buy. So that's just one of those times where we'll probably be back peaking in May next year, but this is just one of those three times.
What you're talking about shows up here. This chart is the July lumber futures, and the top of the market was on March 4th.
Right.
And we got this next pullback, which topped out on Friday, April 22nd. So there you got your March peak and essentially your May peak right here.
Yeah, when the March peak happens, you have the April buy is less than normal. If you look at what happened in April last year. Last year, April was the big rally month. We went from 1,000 to 1,700 in a month, and then we peaked out in May. But it was easy to get an overreact. It's almost like April's the most important or pivotal month of the year, because if it gets overbought, then you're going to have a big sell-off. If it gets underbought, then we're going to have a bounce in the summer.
All right, so let's. I just want to highlight these things on the right here. The market's not snapshot. You're like, momentum to the downside is taking root. That's pretty obvious. Weather, there's nothing significant in weather. This is probably the time of the year when you're least impacted by weather.
Yep, as it gets.
One thing I want to highlight, actually, an upcoming show we have. I think it's going to be in July. We've got one of the top meteorologists in the world who's going to be on our Friday Smart Market talking about the weather patterns. Yeah, he's a friend of ours. He actually he works for Wall Street firms and helping them make money by weather. So this guy knows his stuff.
And this is a La Nina year, I believe, where it's going to have more crazy weather, more hurricane patterns, and more likelihood of tornadoes and storms. So
you can tune in July, and you'll learn more about it on our Friday Smart Market. All right, what is the 6x10 historicals? What does that mean?
That is it's an average. If you go back for the last 10 years, what the projection of the next 6 weeks would be. Them on each section below, and like with southern pine and spruce and dry fir, Doug fir, OSB. I show a little section there, like a little spreadsheet thing that shows what the prices have been for over the last 10 years for the next 6 weeks. And what that shows us there is, over that period of time, 40 I can't read the numbers, at 49%, 44, 46, whatever the number is. It shows you that more of the weeks over the next 6 weeks for the past 10 years, more of the weeks have finished lower than they finished higher. Only 30% of the time they finished higher, 45% lower, 23% unchanged. And that just kind of gives you, it's a statistical number that kind of verifies the FTPs to show you what that trend is, just to give you some numbers. But they'll range from, usually it'll go from like highs of 50% and lows of like 20% or something like that. But that just shows you, like, going forward over the past decade, over the next 6 weeks, prices have historically fallen 46% of the time for an average of $47 a thousand.
Gotcha. All right. And then this is pretty easy. Sales to production ratio. It's mill order files are gone and late shipments are occupying valuable storage space. So we're current. Wood's there.
Yeah, if you get your hands on it. It's interesting though. There's nobody screaming for wood. You still hear people saying that they're very busy and they've got late shipments, but there's not a panic for wood like there was last year. Of got to get a truck, got to go double buy somewhere. I don't think the market is double bought right now. It's just I think the LBM dealers have played it extremely well. The wholesale distributors have played it very well. Nobody's just sitting on an extra pile of wood. And if they are sitting on anything, it's probably recently bought. It's not anything that's just overly troublesome and probably easily liquidated over the next 6 weeks.
All right, and we're talking about housing. We've talked about it. It has headwinds. We've identified some major headwinds for housing moving forward as of right now. Highlight your strategy here. What's this about?
I'm trying to blow it up so I can see what it says.
Oh, okay.
Same thing I just said. The industry is correctly liquidating lumber inventory from a less full position, which means that we talked about the April buy that was less than normal. So it's liquidating from a thinner position, which really sets up a stronger than normal summer bump, which normally that summer bump only lasts like a week or two. It's typically around the July 4th weekend when mills are down for summer maintenance and when vacations are their highest is that first week of July. And buyers go out in probably the end of June and start trying to cover their needs for when they're going to be gone so that they don't have any openings or holes. So I think the time to buy for a summer bump, if you're going to do that, would probably be the second week of June to try to get in front of that and just to get some little coverage for some extra wood in the 1st of July, and then look for the market to start peeling back off into the end of August.
Got it. All right. Southern Yellow Pine. What are you talking about here?
Who loves you, baby? Not very many people right now. Let's see. I think the probably the surprise for the Southern Pine market is twofold. One is that the DIY, and it shouldn't be a surprise, the DIY market has overdid itself over the last 2 years. And you built a deck last year or you built a deck the year before, you don't need to build another one now. There's replacement decks that are always coming up, but Trex and the fiber products are taking, composite products are taking some of that market share. And there's just, when you look at the price of lumber, decking is still one of the favorite things to make because it's so expensive. It's still well over $1,000. And there's just a lot of it being made, but treated sales this year are way down. The other side is that the new production is coming to market pretty much on time, almost a little bit ahead of schedule. And there's just plenty around. And the home centers are not doing as well as I don't think they're not doing as well. I think they're doing what they thought they were going to do, which was not as much as normal. So
right. I was actually surprised with Home Depot's earnings. I thought they would have been a little lighter on the DIY, but it's a look back. So maybe the next
that's like quarter
will show that.
Yeah, it won't be that way next quarter, I don't imagine. But right now, Southern Pine just overproduced.
Canadian SBF. What's going on? You're pretty excited about the addition of forecasting with FDPs that will be misses. So what are we talking about here?
Well, you see that week number 20 or 31 coming, or 21 that was coming up.
Yep.
A few weeks ago when once we saw what had the strength in March and just kind of anticipate what was going to happen, a guy asked me several years ago, maybe a couple years ago, he said, your 86% accuracy is pretty good, but if you could forecast when that one miss was going to be, that 1 out of 7 or 1 out of 8 misses was going to be, that would be really helpful. So I forecasted that this week number 21 FTP was going to be a miss and we would turn early. It looks like that's happening. So typically what happens, it'll take us either the next FTP or either the next or the one after that, it'll get back on track. My expectation is we're going to get on track back in August, and the move that goes from August to the end of September is probably going to be stronger than normal, and we'll probably find that our low for the year comes in August. And but that's the next FTP would be a miss.
All right.
So hopefully that'll make me 100% correct for the year.
There you go. All right, U.S. dry fur. May is liquidation month, and it's going normal, going as normal.
May's always liquidation month. It's just a time after everybody's bought their inventory for the spring. It's not that business is bad. It's just that they prepared for it. There's a preparation cycle and a demand cycle. The preparation cycle was done earlier this year, and we can see that April preparation that kind of bumps up inventories a little bit for the May business was not as strong as normal, which goes back to the theory of we're going to have a summer bump because we're going to get under inventory. But there's nothing happening in May that's abnormal. It's just that people are liquidating what they pre-bought for the season.
All right, green Doug fur. You got another FDP miss.
They're all actually all the lumber ones are going to be misses. There, I think they're all going to turn lower except for OSB is supposed to turn week 20. But I think all the lumber is going to turn early, and green's gotten to be one of those. It's almost a local market only type thing. It used to be widely used in the Northeast, but it's got such a bad reputation for yarding in the summer, turning moldy and black, and so much throwaway that the guys in the Northeast don't use it as much. So it's gotten to be a market that's pretty much stuck to Arizona and Southern California, but it's still people still want to keep up with it.
All right, I could tell you an entertaining story or just point to the FDP. So what's going on?
Well, there's, we can talk about all the problems that happened with OSB and why it was in short supply and how it was mishandled, misdistributed through the last several years, with Home Depot basically being the second source of supply for everybody in the country. And I think that's worked itself out. We've gotten OSB's kind of just shaking off that the bad time that it had with phenolic resin was in short supply, and these got so out of balance. And I think the distribution of the product is more evenly distributed this year, less home centers and more LBMs. And we're coming up on a little place right here, week number 20, where it ought to be a rally. That ought to be the end of a rally, and the market should peak and start going down. So I'm just forecasting that it's gonna do just what the FTP says.
Okay, gotcha. What we have next here is the framing package index.
It's just something interesting on the framing package index. If you look at that, where the graph there that has the black lines and the red line.
Yeah.
If you look back all the way to the beginning of it, there hasn't been one single time when the black line was separated below the red line. And what that means is that the price of what dealers are paying for lumber has been pretty close to what they're charging the dealers. At this point right now, the dealers' replacement cost is so much lower than what they're charging because prices have fallen so hard. So what that tells the builders is you can expect through the summer, the next couple of months, pretty substantial discounts in prices for your framing packages.
Yeah, I have a friend who's actually building a house right now, and I told her, I'm like, you better go get that lumber package repriced because the market is really falling.
Yeah, and postpone as long as you can.
Yeah, for sure. Let's jump to these are shipments.
It's all transportation. There's nothing new in there. It's just
wasn't there transportation? I thought there was a futures one in here. Oh,
here it is right there. Yeah. I think it's interesting that the futures, you noticed this as well because you and Greg talk about this on your show too, but futures has gotten, you can look at futures a couple of ways. If you look at it on a daily chart and hourly chart, and, it can look so confusing, like you just don't know what's going on. And the volatility has really calmed down a bunch. And I say that with a couple of $40 days in a row here on futures going down. But if you look at those trend lines, we're in a down-sloping wedge that's at the bottom of the wedge, and the wedge is getting more narrow. So technically, this market is the sell if it rallies back to that top down-sloping trend line. And the trend ought to break lower. Just looking at that picture.
And I think the futures actually plays into your narrative of the V recession, because I can pull over. This is current lumber futures, and today we went down, and we had a number 6 on the first digit of futures. In fact, the low of the day was 690. We compared to the chart you showed, we've broken that trend line a little bit, but if futures was so cheap, everyone would be buying it right now.
Yeah, I have this guy that's a friend of mine that says he says I'm a buyer. He used to be back when the price of lumber was $400 or $500, $300-$500. He says I'm a buyer all the time at $300. And I said, have you got your CIC order in? He said, what's that? I said, cancel is closed, because every time it gets to your number, you don't want it because everybody can get it. It's too easy to get.
Yeah.
And that's going to be the same thing that we've been hearing. I think Russ Taylor was on a couple of weeks ago talking about the break-even price for Canadian lumber was about $600. But I want to let all of you guys know, if you guys, any guys that have been around here for a while, you know that doesn't mean anything. Cost of production is just lets you know where they're breaking even and making money. But when they were $600 break-even cost, that didn't keep them from going to $1,700, and it won't keep them from going to $300 either. So yep. In the report at midweek, I made a comment that I thought the prices were going to go to. I think SPF's going to go to $500 this summer, and I mean that's the cash market. I think not just the futures, but I think the cash market will before the summer's over. And you think about it, that's still not a bad number. I mean, it's just relative to $1,700, it seems cheap, but relative to the 10-year, 20-year average of $300-$400, $500 is still plenty good money, and it works for everybody. It may not work for Canadians, but it works for everybody else.
Yep, for sure. And the one thing I want to highlight about futures, of course, is it is a future price, meaning this is for wood that's going to get on a rail car and ship the end of July. Showing up in August.
And actually, it doesn't have to ship till the middle of August. It's got 30 days. It's almost 35 days from the expiration date before it can ship. So it's conceivable you won't get that lumber till early September.
Right. So this is while it's interesting data point to look at, this is a ways out. And at this point of the future cycle, we are almost as far away as you could get in the front month from the actual delivery. So. You're not going to go buy a futures car and have it hit the tracks tomorrow. That's for sure.
Yeah, if you can sell it and somebody wants to pay for it, that's fine. But it's certainly not a speculative place to play right now.
All right. Well, look, we've successfully burned through a couple of 40 minutes here this afternoon. The one thing I want to highlight that I was just watching was the big dichotomy between southern yellow pine prices and spruce prices and western U.S. species prices, and we're seeing those prices come together. So is southern yellow pine is that the species that leads the market now?
It's definitely just by volume as species leads the market. But I'd ask the viewers that are on here if you guys could type in your chat box. Are you liquidating inventory, or if you are liquidating inventory, just type in a Y in the chat box to see where everybody's intentions are, what's going on.
I think that's what they should be doing. But yeah, I think it's interesting when I look at the way the market today acts and how long it takes for certain species to turn. And it just so happens those tend to be the species that are most heavily contracted. And I mean, I have an opinion. This is my opinion. I'll throw it out there. When you have a contract, you've given up your control, and now the control is in the mill's hands, or whoever you have that contract. Their intent is to keep the price as high as they can for as long as they can.
You'll see that in OSB more than anything else. That's why OSB gets to the top of the market and just stays there and stays there and stays there, because 80% of the product's sold on contracts. So if you think about it, all you got to do is sell 1 day of production. 1 day of production for a week is all that's available on the open market. So when you get a mill that's got prompt wood and the prices are weak, they got a bunch of it. If they're still shipping 80% and whacking prices like crazy, they're sitting on a ton of it. But I'm not a fan of contracts. I think you're better off playing your odds, taking advantage of the volatility in the market, building and accumulating and liquidating your inventory with the market.
And look, I'll put the footnote is I've never ran in a lumber yard, or I understand that you do have to have inventory. So buying on contract will definitely ensure that you have the wood coming in. So I just want to point out, I think that you lose a bit of control when you buy under contract for sure. All right, Matt, thanks. This was great.
Thank you, Mike.
Ash will be back next week. We'll have a lot of good things to talk about. We'll be coming back from the Montreal Wood Convention. We will have heard what the CME is going to do with their lumber futures contract, which will be pretty interesting.
Yeah, you guys haven't heard yet. They're considering the possibility of a Southern Pine truckload contract.
Oh, interesting. Yeah. So there's some changes. The winds of change are blowing. That's for sure. All right, Matt, have a great day, everyone. Be safe.
Thanks, guys.
We'll catch up with you all next week.
See you soon.